All right, everybody. Stocks by the numbers. Welcome back. I know I'm coming to you a little bit later here, just past 2:30. Hopefully, a bunch of people see this video in time if you were contemplating going off of my personal predictions. But again, this is just my opinion, but I just like to do these predictions lately. We've been more right than we're wrong, so let's keep it going, right? First stock we're looking at is Broadcom Incorporated, ticker symbol AVGO, listed here on the NASDAQ. Tech stock, semiconductor company, of course, trading near all-time highs, absolutely raging. There's a one-year chart. You can see the stock is up well over 100% over the course of the last 12 months, sitting here at about 1,400 a share, we'll call it, up almost 50 points, a little over 3.5% here on the day going into these earnings. 52-week high, 1438. Of course, we can immediately make the argument that the stock is overvalued as we look and see that we closed out 23, bringing in 35.82 billion, and the market cap is almost 650 billion. So obviously, we are trading at a very high yearly revenue to market cap comparison. Company's paying out a dividend, currently yielding 1.56%. We have a PE up here at 41. However, it's a tech stock, so we've learned that that doesn't really matter. The company has been consistently beating on the EPS side here. We can see for the last 4 quarters, looking like a slight dip here on the EPS side for this quarter coming in. Estimates of 1037. However, this is still slightly above what they posted this time last year. And based on the rate at which I'm seeing this company growing here, very nice increases in revenue, the profitability following suit. Look at that, almost 40% net margin percentage for 2023. Absolutely ridiculous. And if you switch over here quarterly, we kind of dipped down from the high 8s into the 8.7s and then back to almost 8.9 and then above 9 billion here. And now you can see for this quarter almost 11.8 billion. Now the last time that we looked at a company that was as consistent as this with, look at this, with estimates jumping up, I said, in my opinion, even if they beat that estimate, they're still overvalued. They should still drop down. Look at this. Going all the way back to 2016, even on the annual, we had one miss on both the top and bottom lines one time in 2019, and it was literally by cents, pennies. This is the one negative when it comes to this company, Broadcom, with earnings going back to 2016. You can see on the annual side, absolutely beautiful, with estimates north of 50 billion for 2024 and then continuing upward, 10% more in 25. Yeah, throw on another 8-9% going into 26. Absolutely ridiculous. So based on the consistency, even though in my opinion, of course, I say that the stock is way too high, again, we have to follow the consistency. And I had some reservations about some other tech stocks, even though they were consistent as well. We had Dell Technologies, if you recall. It was pretty consistent, but because I saw the revenue estimates dip down, I thought, in my opinion, that was going to be a red flag and the stock was going to go down. And what happens? They ended up beating the lower estimates, pumping up future guidance, and the stock absolutely exploded. And on the flip side, we had something similar just a couple of days ago with CrowdStrike, if you remember. CrowdStrike, in my opinion, almost reminded me right here of Broadcom. It was overvalued in the numbers, in my opinion. And even if the company beat earnings, I felt that it really shouldn't have moved. And, you know, if they didn't want to bring it down because it was too high to me, understandable, because of course an earnings beat is positive and it's good news. But the company comes out, beats earnings, pumps up future guidance just like Dell did, and boom, the stock ended up jumping up another 16-20%, whatever the heck it was. So again, unfortunately, I know the way I look at it, we could make the argument for the most part I am more right than I'm wrong. However, as we know, the tech sector is just flying to the moon, and chances are, I'm sure without even looking, somehow this company is connected to NVIDIA and AI and everything's great. And as you see, the stock is up another 3.5% before even posting these earnings. So even though these estimates are extremely high, with, in my opinion, the stock being extremely high, meaning that even if we meet or beat this number, the stock should drop back down to like 1,200, in my opinion. Chances are that's not going to happen, and they're probably going to beat earnings and go higher. Switching over here to stock charts very quickly, we can see the stock is sitting right at the top Bollinger Band of a little over 1,400. The RSI is close to 70, but we've seen with tech stocks that none of this really matters, in my opinion. That's what I'm seeing anyway. Because again, I'm a realist, and it's amazing how, you know, I could look at I could look at a stock like a Hershey or a Campbell's or a Fubo or Victoria's Secret yesterday, right? Isn't it amazing how I can look at all these companies and be significantly more correct than incorrect? But then when you show me a ridiculously high-flying, overpriced tech stock, even when I personally call for a sell-off, it doesn't matter, and the stock just jumps another 15-20% and consistently grows and keeps hitting new highs. So, again, the MACD is, through the roof here. Look at this. We're going back from that sell-off, in my opinion, that was justified. Oh, no, wait, this is the wrong year. Here, the sell-off, in my opinion, after peak summer that was justified going into October. And then, of course, we just went on an absolute tear from the day after Halloween. And people want to say that we've been up for the last 5 months straight because of the quote-unquote potential rate hikes that are coming. And again, I just have to remind everyone, just remember, to me, in my mind, it can't make sense that you're ready to continuously pump these markets on these potential rate cuts when the whole time rates were getting hiked, you also pump the market up. You literally cannot play both sides of the fence like that. It can't work out in both situations. So again, I'm not saying that, in my opinion, markets are going to tank if rates get cut, because again, you would think that that would be good news and markets would go higher. But I'm just saying, I'm just putting a little disclaimer out there. I want everyone to stay sharp and be prepared for anything. Because again, rates hiked. That is technically bad news. Stocks kept going and hitting new highs. Now everyone's pumped that rates are potentially going to be cut. But again, you pumped it on the hikes, but I just don't see how you can also pump it on the cuts. And that's the problem. Because again, that's why I would always make videos saying, in my opinion, we're rallying for no reason. This isn't real, blah, blah, blah. Now again, this is just my opinion, but when we look at it the way I just laid it out for you, it makes a ton of sense, doesn't it? But that's just the way I'm looking at it. But anyway, long story short, Broadcom, AVGO, yeah, the tech stock's probably going to beat. Everything's going to be great. Switching over here to Costco, ticker symbol COST, listed here on the NASDAQ. This stock obviously doing very well. There's a wholesaler. You go to Costco, you pay for the membership, boom, you can buy like a giant thing of ketchup instead of a little tiny bottle, and you can save money in the long run. And obviously, the word has spread over the years, and Costco's business overall has been growing absolutely phenomenally. We have a market cap up here of $348.8 billion. The company's paying out a dividend yielding about 0.5%. We have a PE of a touch below 53. We have a nice EPS. We have a beta of less than 1, beating on the EPS side 3 of the last 4 quarters, with this quarter's estimates basically in line with where we were last quarter. Looking for a nice jump here, though, year over year. From oh no, wait, my apologies. Is Q2. Yeah, still looking for a nice bump. It's about a 5% bump here on the EPS side, Q2 year over year. We can see obviously Q4 seems to be the best quarter for this company. Q1 of last year, $54.4 billion. Q1 of 24, $57.8 billion. So now, this time last year for this quarter, $55.27 billion. Estimates of $59.111 billion. So technically, we could make the argument that it's a little high. I think the company has about $10 billion in debt, which of course compared to their market cap really isn't too significant. The company's also holding like $17 billion in cash. I don't know if many people actually even touch on this, but let's check the earnings. As we see, Q1 and Q2 of last year, the company actually missed on the revenue side. Big miss on Q1 there, off of those higher 58 billion estimates, and you can see the company comes in, beats Q1 this year. So Q2 with a slight miss there, in my opinion, chances are the company's probably going to beat, it's probably going to go higher. On the quarterly side for EPS, we can see we have 1 miss in the last 8 quarters. Looking annually back to 2016, we can see 1 miss for the year in 2019, and of course it was very, very slight, and then we come out after lockdowns, and the company actually performs better than analysts expected. On the EPS side as well, we can see the profitability has been taking a hit, but hey, that's Bidenomics for you, right? So overall, the company, in my opinion, looks great. Obviously, Costco, brand name in the space, solid, stable company that is basically consistently growing, consistently generating more and more revenue from their subscriptions. I get, are they subscription? Yeah, they're subscription memberships, excuse me, memberships. But yeah, just a brand name company in the space that's consistently growing. They pay you a dividend. Really can't get much better than that. Again, we can see the debt. The debt did jump up to almost 11.5 billion. Has been kind of ticking down though. We can see the debt here, 905 billion, 914, 9, up to north of 10.5, back down to 9.3. But look at the cash. This blue bar here. Look at this, 10.86 billion, almost 13 billion, 12.5. 13.7, $17 billion in cash right now this company is holding. Well, cash and equivalents, but you know what I mean. Cash, short-term assets like that. But absolutely beautiful. And the free cash flow as well. You can see 1.5 billion up to 2.3, back down to half that original number at 720 million. Back up to above 2 billion as of last quarter, 3.61 billion. So in my opinion, I feel like they may have turned the profitability side around, and I feel that the business overall does remain strong. And of course, we can make the argument as to why we feel that it could potentially be viewed as overvalued, but it's not that crazy when compared, especially looking at the revenue. Again, you know, they could potentially try to beat this stock up, because looking at the net margin percentage, you can see 2.4, 2.6%. So the company is not wildly profitable. However, we've gone to such a scale now. Look at this. The company bringing in almost $250 billion for 2023. And even though we're talking, only 2.6% profit, yeah, off of that number, $6.33 billion that they made. So you have to give credit where credit's due. It seems like, again, not only is the revenue consistently growing year over year, but of course the profitability is basically continuing to scale along with it, even through these difficult times. And in my opinion, I would say Costco calls. I would say Costco calls. And it's funny because in my mind, in my opinion, it seems like the most solid prediction. And yet, as we've seen, sometimes those are the ones that miss and end up taking a hit for us. But in my opinion, I mean, you really can't deny the growth in Costco. Look at this, just from, this is what I mean, this explosive rally. As soon as the calendar ended and we hit Halloween, all of a sudden, it was straight bull run here. We're talking, what, 5 straight months? Yeah, that's normal, right? I mean, markets used to fluctuate. Remember those days? Up and down? Do you remember that? Nope, we're only going up essentially every day for the last 5 months straight. So you guys can call me a pessimist in the comments. You can tell me that I don't understand the vibe in the market. That's fine. I do understand numbers. And again, while rates were hiked, we took markets to highs. So now we're consistently hitting highs and we're always green, and when indices go drop and sell off red, they immediately rebound and go back green and climb and hit highs the next day, even if they pull back and sell off one day. So again, for me to be sitting here saying a lot of these stocks are overvalued and the markets may pull back, you really can't call me crazy for saying that. But Costco, again, this just seems like a situation. It's just too solid. It's too strong of a name, in my opinion. The RSI up here at 85.5. We got candles well above the top Bollinger Band. Look at this, just riding the top riding the top fucking BB for months here. I mean, it's in my opinion, it's just unrealistic. But I guess if we were going to reward one stock with that type of movement, if it is Costco, I guess I can't bash them too much. But look at the RSI on the weekly. It's been above 70s since like December. I mean, come on, it's just ridiculous. But again, technically looking at the numbers, like I said, in my opinion, it could be viewed as undervalued, with the company bringing in $242 billion in revenue and having a market cap of only $349 billion. So even though the PE may be high and the profitability could be, again, viewed as smaller and tighter when compared with other big brand name companies in the space, I still think that Costco has much more room to grow. And in my opinion, I would probably go Costco calls. Marvell Technology, ticker symbol MRVL, listed here on the NASDAQ. Another tech stock, semiconductor company here, a touch below 85, up 4% going into these earnings, hitting new 52-week highs essentially as we're speaking here at 84.91, 73 billion market cap, paying a tiny dividend, yielding out less than 0.33%. The company's still losing money. Beta 2 times as much as the market. Basically met with a slight miss there on the EPS side, beat the last 3 quarters in a row on the EPS side, with profitability set to increase again quarter over quarter. We're looking at estimates 1.42 billion on the revenue side. Very nice recovery coming out of lockdowns, as you see, sub 3 billion for 2020, and then up to almost 6 billion in revenue just 2 years later. So very impressive in my opinion. However, quarterly, we can see that the revenue has been pulling back along with the profitability. We could potentially have found that bottom, making the U-turn. Last quarter 142, this quarter 142. Q4 last time we saw the dip from Q3 to Q4. So we could potentially come in lower than 142 billion estimates. 6 billion, what's the market cap? 73 billion. I mean, based on recent quarters, if I had, again, Broadcom, AVGO looking very solid. I'm really not sure if I would bet against it, even if I feel it's overvalued. Costco, again, in my opinion, just too damn stable and consistent, and I actually think it's undervalued. So I would buy calls on Costco as well. Marvell technology right here. This may be the put play. We have 3 lower highs coming here, consolidating before a pop higher to new highs. So I would say mid high right there. Back to that top of that candle, which is basically right around this fib level of the high 72, 72.86, 72.90. In my opinion, I feel personally that is where this stock should be. So we'll see what they report. Let's see if we see anything on stock charts. On the weekly, of course, we're a tech stock, so we're at highs. Our RSI is well above 70. We're well above the top Bollinger Band. MACD has been climbing to the moon, but it's a tech stock, so none of that matters. RSI up here at almost 75. Again, we exploded. We're well up above the top Bollinger Band. MACD beelining straight up here. What's that, like an 80-degree angle? Close to 90% almost straight up. In my opinion, and wait, what was that pullback? 72.86, 71.39, mid Bollinger Band. So, yeah, I'll go out on a limb. In my opinion, Marvell Technology, MRVL, I would consider puts personally. DocuSign. Okay, we've been popping, we've been dropping. Another tech stock, DOCU, here on the NASDAQ, stock a touch below 54, up 2.5% here going into earnings. EPS 64.7 cents, estimates a touch below 700 million, $11 billion market cap, PE over 200, sure, why not, screw it. Look at that beta. The profitability has been rising well above analyst expectations for the last 4 quarters in a row, looking for 65 cents, which is what they posted this time last year for Q4 of 22. So, I mean, in my opinion, based on what they reported this time last year and how the company has been reporting the profitability, you would think it would make sense that this would be higher than 65 cents. But we love to lowball a lot of these estimates on these tech stocks so that they continue to grow and take over the world. Profitability was essentially flat, slightly positive here, 1% in Q2. Last quarter jumps up to 5.5% as they break above 700 million. Now we're expecting 698. This is Q4 this time last year, 659 with consistent increases. 2.5 billion for last year, 10 billion market. Yeah, in my opinion, DocuSign probably going to go higher. Docu calls. Very understandable in my opinion. Look at this tightening here that's been taking place for about, 15, 18 straight months here, just tightening in this little consolidated range. Looks like they brought it down to the 50-day moving average and it immediately bounced off of it twice, it looks like here as of late. getting above the mid Bollinger Band as well, 52.45. Stock currently sitting at 53.81. It's funny because this one looks the most realistic, and incidentally, this is the one that they've brought down and kept down. So, in my opinion, I would, if I was to roll the dice again, I would say calls on DocuSign, DOCU. And again, I don't even know if it pays to look at the debt and everything, because I did that last time with Dell and I was just completely incorrect. But over the years, the company has been beating revenue estimates. Over the years, the company's been beating profitability estimates. 4 quarters in a row on the revenue side, 4 quarters in a row on the profitability side. The debt, of course, jumped up, but that doesn't matter. 888, 882, 878, 835. All right, so the debt has been basically consistently decreasing for the last 4 quarters. Look at the cash as well. 632 million, 720, 940, a billion, almost 1.2 billion. So the company has good cash on hand, and it has been bouncing around, but the free cash flow here in the middle has, for the most part, been climbing. Short-term liabilities outweighing assets. Technically, it's a red flag, but we're talking about a tech stock, so it might not matter. Assets up, very nice. Liabilities up, nowhere near the same amount in the same time frame. Equity almost tripling going back the last 18 months. Look at that, from 349 million up to 965 million. That, of course, assets minus liabilities yields equity. Equity equates to book value per share. We can see this time back in early 22, book value $1.75. Now we're up to $4.73. So technically, again, we are trading at a high price to book ratio, but it's a tech stock, so it doesn't matter. Operating expenses seem to basically be in line. Operating income goes positive over the course of the last 5 quarters. Yeah. In my opinion, calls on DocuSign. What else? BigBear.ai. We know if a stock has AI in it, we have a good chance for it to go up. And I mean, usually most tech stocks do go higher, but now we have an AI situation here. BigBear.ai, ticker symbol BBAI, listed here on the New York Stock Exchange. Stock, of course, just recently exploded. What's going on here? Any news, or are we up? Wall Street bets on it, of course. I love how every time a stock moves, it's a Wall Street bet stock. Market cap sub 600 million, losing $0.50 a share, trading almost 4 times as volatile as the market. Seriously turned around that profitability last quarter. Very nice jump right there for Q3 of 23. 150. So revenue dropped about 20%, but they were more profitable. 33 estimates of back up to 42.75. Huh. Gross margin, not really back to the highs that it was. Operating margin, moving in the right direction, not the highest it's been. Same thing with EBITDA. Net margin goes positive. Asset turnover climbing very nicely. Don't really have the time to find out exactly what happened last quarter. I don't know. This actually looks like a rough one, but again, it's an AI related stock, so it's probably going to go higher, in my opinion. We now have liabilities outweighing assets, yielding negative equity. When we used to have plus 50 million equity, we have a negative book value here. But it doesn't really matter, does it? AI stock, it's a buy. I guess I'll just say it like that. We'll look at one last one here. It may seem like lackadaisical analytics in your mind, but again, sometimes we overanalyze, and it just doesn't work out at all. So that's why I'm saying again, I'm just feeding off of this tech hype, and of course the AI hype, and other companies like we looked at Broadcom originally. Of course, again, in my opinion, way too high, but tech stock consistency, right? This is what we're looking for. Gap GPS here on the New York Stock Exchange kind of looks like we're in this little consolidating range here. Might have a potential pop up higher. Let's check the numbers. 7.1 billion market cap, dividend yielding out over 3%, PE a touch below 200. Why not? One of the few apparel companies that's flying high. Profitability looking very nice here for the last couple of quarters, beating well above analyst expectations 3 quarters in a row. Revenue took a massive hit here, going from the 4s down into the low 3s, but somehow becoming more profitable. 3.7, and now Q4. We had the jump in Q4. That's the holiday season, right? What are we expecting? 4.21. That's technically a decline year over year. However, that is their best quarter for holiday season. Assets outweighing liabilities, equity 663, so we're trading like 3 times book. This is actually the most fair valued stock that we've looked at here all day, in my opinion. Aside from Costco, maybe. A lot of these numbers pulled back. Yep, trading less than 3 times book, which is actually the highest it's been going back the last several quarters. Enterprise value, again, supposedly what another company would pay to buy this company out, about 50% higher than the current market cap right now. But we know that doesn't really mean anything. Return percentages back positive. Gross margin highest it's been. Operating. Inventory turnover has been dipping, but now we're going to Q4, which is here, which as you see, back last Q4, highest on the list here of these 7-8 quarters. Okay, debt ratio is going down. How much debt exactly? Let's get a number. We can see the debt has pulled back nicely here. 6, sub 6, 5.6, 5.5. Free cash flow took a hit. Cash at equivalents, basically the same. In my opinion, I would go calls on GPS. Gap. One last one I wanted to look at here. Smith & Wesson. Ticker symbol SWBI, listed here on the NASDAQ, 1341, up about 1.8% here on the day, touch over 600 million market cap, dividend yielding 3.6%, PE a touch over 20. And we can see EPS was doing well, beat 3 of the last 4 quarters, missing last quarter by over 20%. Revenue was climbing nicely, 144 down to 114, 124. Profitability took a hit. Back up to 133, 133. And this would be Q3. Last year, 129 on the way up. Took a dip on the way up. Yeah, because I feel like it is politically driven. However, again, with what's been going on, well, for a while now, but I actually think what's going on with the border, and of course, a lot of recent crimes being committed, no one really doing anything about it. What am I looking at? Okay, we got like this upward channel we're in. We're near the bottom of the channel. What's the bottom range there? About 1140. So we could have a big drop, but actually, in my opinion, I would consider calls on SWBI, SWBI, Smith and Wesson. As you see, declaring the dividend in 2020 and consistently increasing it and staying with it. Very nice. We can see the debt was up here, a couple of $100 million. Dropped down very nicely, increased last quarter 65 up to north of 100 million. Assets alone are over 500 million, market cap 600 million. In my opinion, I would consider calls. Shares on SWBI, in my opinion, long term you probably be fine. Right, if we're talking strictly an earnings play, I would still say calls, actually. Look at that, 200-day was down there in the low 11s. Now it's almost $13. Very nice. Just slightly below, about, what, 3% lower than where the stock's currently trading right now. Very nice. Everything's middle of the road. Look at that, just middle of the road. Look at how flat, minus that big drop. But look at how flat the stock has been. Look at the MACD. Look at how flat it's been. Switching over here weekly, I mean, you know, it's on the up and up technically, but just look at how tight and flat it has been. That's why I think they actually do come out with a beat, and you might see a pop here, a nice 1-point pop from 1340 maybe up to about 1440 right there. Yeah. Yeah. Again, that debt jumping up might not be a good sign. However, with earnings, anything can happen. We know this. Check my balance sheet very quickly. Look at this. Not even trading about 1.5 times book value. Assets keep growing. Liabilities as well, but equity dipped down the last 2 quarters. Seems to be climbing, though, over the long term. Yeah, in my opinion, I would say calls here. In my opinion, I would say calls here, and I think that's it. I just wanted to look at a few names. So, first name was Broadcom, AVGO, in my opinion, calls. Second name, Costco, symbol COST, in my opinion, calls. Next name, Marvell Technology, ticker symbol MRVL, in my opinion, puts. DocuSign, DOCU, I think I said calls, I don't even remember. BBAI, BigBear.ai, it's an AI stock, so you probably want calls. Gap, symbol GPS, in my opinion, calls. And last one here, SWBI, SWBI, Smith & Wesson brands, in my opinion, calls. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. More importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.